So S-Corp, the five numbers you must know before you elect. So an S-Corp is not a tax hack. It's a math decision. In 10 minutes, I'll show you the five numbers that tell you yes, no, or not yet. And most people ask, like, should I become an S-Corp? When the real question is, do your numbers qualify you for savings after costs and compliance? Now, this video is for two types of people. The first is people who have a W-2 plus a side hustle. And the second one is going to be a self-employed business owner that's right in between the 150,000 about $500,000 per year range, who are S Corp curious, we like to call them, and want a clear yes or no decision based on their actual numbers. Now, this video will help the viewer decide whether an S Corp is a smart move or is a smart next step by walking you through the five numbers, determine if the savings will beat the added costs and compliance. Now, a quick intro. My name is Bryce Tubbs. I'm an enrolled agent and bookkeeper. We started our firm back in 2015. Now, our work is focused on four things: bookkeeping, cleanups, tax planning, entity formation structuring, and monthly bookkeeping. And the reason I made this channel is simple. Most people make tax decisions with bad numbers and bad info. And I'm here to make it plain English so you can stop guessing and start making decisions based on your actual P&L. So remember, you don't really avoid taxes. You change which taxes apply to which dollars when you're doing an S corp, and then you add in compliance costs. So here's the non-tax part. Many lenders will treat you as self-employed if you own more than 25% of a business. That's on your Schedule C, sole prop, partnership, LLC, S corporation, etc. And they may want 1 to 2 years of tax return history. So paying yourself clean W-2 wages from your own S corp doesn't always remove the self-employed label, but it can make income documentation cleaner. So when you go full time, so you can still qualify for normal life stuff like a mortgage, a car loan, etc. I remember when I first started my consulting business, at month 8 in the business, we were doing about $15,000 a month. At that time, I'd been full time in the business for about 6 months. I couldn't get approved for a car loan because I was new, and to them, they kept saying I was newly self-employed. So on paper, I just had an LLC and not enough tax return history yet. Because again, we'd only been in business for like 8 months. And the money was real, but the paper trail just wasn't. I remember my business partner got a call saying like, "Hey, is this person actually making this much money?" Like, it was it was funny because the business partner, I was sitting like right next to her when they asked that question. It was just really funny. So by having this like S corp is going to make it a lot easier for people to do that and get like approved for loans. Now, the number one question is your true net profit. And I mean real profit after real expenses, not just whatever QuickBooks says. If your books are like a mess, it will make it a lot harder for you to understand that. Now, here's the rule of thumb. If you're under about $40,000 to $60,000 in annual net profit, an S corp is usually going to be premature for you in that situation because the payroll, the tax return, the bookkeeping, the administrative costs are all going to eat up the tax savings that you would have otherwise gotten from the S corp. So once you're more like above 70,000, $100,000 in net profit per year, that's where it often starts to really pencil out. But again, only if your reasonable salary still leaves enough profit to take some as distribution. So it's like 70K would probably be like the bare minimum, and then like from there it gets more reasonable for you to do that. So I'll give you an example, right? So if you're like making like 5K plus in profit, like the payroll costs, the tax prep, the admin typically are going to cost more than the tax savings. So people end up doing a ton of work and just save like nothing, right? So I'm by no means a person who's gonna be like the S corp is a be all end all. You have to do it. It's like no, no, no. I would really kind of take your time when you're getting into this, right? And remember, a quick warning. This whole decision of becoming an S corp is only as good as the numbers that you're using. So clean bookkeeping and correct categorization matter more than people think because tax planning is usually a percentage game. So a 2 to 3% swing on 300,000, right, of net income becomes like 6,000, 9,000. So we can find that kind of improvement like in area one, area two, area three, right? Let's say again, like it's 3% times three, you're gonna be saving an extra 9%. Depending on how much you make, getting over from like 18,000, $27,000 back in your pocket so you can start like enjoying your life or continue to build your wealth. And zooming back to like the S Corp decision, like one miscategorized expense missing revenue item or personal versus like business mix up can swing your net profit by thousands, right? And net profit is the number that determines number one, if you're even going to have S Corp savings, and number two, how risky your reasonable salary position looks if you are ever audited. Now we'll talk a little bit more about like, what a reasonable wage is, probably the next slide. But also before that, like if before you even think about having an S corp, if your numbers are a mess, right, and getting your P together, like that we talked about in step number one, is challenging, book a call with me and see if I can help you clean up your books, right? That's one of our bookkeeping services we offer. Now, that's what we're talking about. So, people oftentimes think they can pay themselves like 20K on $200,000 profit, right? And like remember, so when you're doing an S corp, right? So there's two different like things, right? So there's the wages that you pay your employees, there's like the remaining profit inside of the business. Now, one thing that's problematic is a lot of times when owners try and like become an S corp, they try and pay themselves like in wages as little as possible. But it's not good because if you're the one doing the work, so like the sales, delivery, managing the business, the IRS expects a reasonable wage that looks like what you pay someone else to the job in your area, in your industry. Okay, so the reason why it's unreasonable is because you wouldn't pay someone else that same amount of money. It's the same thing like when people talk about like hiring on their kids, right, for tax deduction. Like if their kids like writes like a letter or something or writes something small, it's like you wouldn't pay someone else 10,000 or $14,000 to do that same piece of work, so you can't write it off. It's the same thing with paying yourself. And also keep in mind, like 20K might only make sense if you barely work. If you're part-time, you can show like, you're not spending that much time in the business. Okay, that's reasonable, right? Because you'd spend maybe part-time like $1,000, $2,000 a month if the role was truly limited. And remember, there's also a simple version, right? So it doesn't really go over your head, right? Every dollar you pay yourself as a W-2 person gets payroll taxes. Now, distributions usually don't. That's the difference where a lot of the S Corp savings are going to come from. So a rule of thumb. So the savings. So basically, when we talk about the distribution savings rate, it's often around 15% of the portion. So we talk about wages versus distribution. So off of this distribution that you're going to treat as legally distributions, it's going to be about 15% savings compared to what you get for wages. And for higher income people, it's going to be close to 4% once you have the Social Security cap, because then you're mostly talking Medicare taxes. Now, some quick numbers just to kind of make this more real and tangible. If you can legitimately take $50,000 as distributions instead of wages, 15% of $50,000 is about $7,500 in payroll taxes avoided. If you can now go up, like let's say it's $80,000, right? 80,000 times 15% is $12,000 of potential payroll tax savings. So this is why you need to have a certain like that minimum threshold of 70 to 100,000. Because like once we start talking about 100,000, 1%, 2%, 3% is actual meaningful money, right? When you're talking about like, you made $10,000 a year in the business, it's not really, meaningful enough to really make sense. Excuse me. Next thing. So your profit sets the ceiling on what you can actually evenly like even split. So a reasonable salary is going to determine how much must be on your W-2, and like whatever profit is left after that becomes potential distribution bucket. If there's not much left, the S Corp savings shrinks or disappears. So in a decision, you need to think about what happens after you become an S Corp. Payroll, bookkeeping, and extra tax filing costs become very real. If those fees outweigh what you will save, then it doesn't make sense at your current stage. And remember, you don't have to rush into an S corp. You can move at your own speed. So if you start asking yourself, like, can I elect? You're really asking, does it net me more money after doing this thing right? So just kind of like just simple like common sense. It's like break even equals estimated self-employment taxes minus S corp costs. If you have like clear net savings plus stable profit, then yes, do it. If it's a close call, but you have to like maybe fix the books first, you don't really exactly know, I would say maybe slash not yet. Or if your profit's too low or your salary is too high relative to profit, then I would say like no, don't do it yet. Okay, so just some quick real world scenarios, like some really fast examples. If you have 60K profit, again, likely not after all the costs that are included. Scenario B, $120,000 profit with like solid records. It's often worth modeling just to like have just a last minute check. If you're doing about $250,000 in profit but high reasonable salary, I would say it kind of depends as well. Really better if you start working like a professional that can actually help you go in and like discover this for yourself. Because again, like some common mistakes that people are going to make, right, are like electing with messy books and like guessing profit. Like if you don't know your profit, again, it can just be really, really it's not that it's detrimental, it's just a lot of hassle. Like now you have to go and like make you have to file like payroll, estimated payroll taxes quarterly, right? So that's like an extra return you have to do. It's an S-Corp return. Then you also it's just a lot more like just a lot more scrutiny that's kind of placed on you that you wouldn't normally have. So it's like it makes sense at a certain point, but just don't do it if it's not worth it, right? Next thing, if you're setting your wages like unrealistically low, or if you're forgetting state rules plus payroll compliance because you're doing this on your own, if you're thinking that an S corp is just going to fix spending problems, or if you're waiting till tax time, like to actually do anything or file your taxes or make payments, and you kind of just like rush to a decision, like don't, those are really, really common mistakes, right? And then again, what to gather before you decide, last 12 months P&L plus balance sheet or the best available. Revenue by month will show you your stability. After that, what you actually do in the business, like what your actual tasks are inside the business to kind of determine like what's a reasonable salary. After that, like what is your current entity, like if you're an LLC or a sole prop or a partnership, and which state are you going to be in? Because it's going to have some differences. Also, like what is your current like tax return, if you have it. If you haven't filed taxes since you started business, okay, or if you haven't filed taxes, just in a little while, right? That's gonna be important. Okay. So next steps. Here's what to do. So if you're curious about if an S corp is the right next move for you, and not just something that you heard on TikTok, book a call and we'll get you clarity really fast. The goal is simple. On the call, I want you to leave with a really clear yes, no, or not yet, and a next step plan that you can actually follow. Also, if you want, we can actually work together in my bookkeeping and tax firm. Now, here's what we do when we work together. I'll help you get your clean numbers. I'll help you run the S-Corp math. I'll build a plan so you know exactly what to do next. And specifically, I can help you with reviewing your last 12 months P&L and make sure the profit number is real. We're going to clean up your books if things are messy. We're going to model the break-even point, also estimated payroll tax savings minus the real S Corp costs. We're going to help you understand and coordinate the S Corp setup and the ongoing requirements. And also, we're going to dial in your owner's pay, exactly how much you should be for your W-2, how distributions work, and what it looks like month to month. So, if that sounds helpful for you, and if you want to learn a little bit more about like, what that costs and get a quote, click the link inside the description below, book a call, let's see if we can work together. Okay, I'll talk to you soon. Have a good day. Take it easy.